But I think so to comment on Alexander's point, I think it's not only it's important to sort of how many investors you have, but actually how much you give it away. I think we see quite a few early stage companies have already sold off like 60% of their company. When
that's a problem.
Yeah.
Right? So if you're giving too much away early on, and then you go to raise some bigger money, that could be a problem.
And why is it a problem? Well, it's basically a problem because as we come in slightly later than these guys, we want to make sure that you are motivated. We want to make sure that you own as much as possible of the company, because if you're going to build a big company, you probably need to raise capital over and over and over again. And every time you raise capital, you are going to own a bit less. So for it to make sense for you, when you're making that big funding round in 5 years, you need to start early to own as much as possible.
So what we consider to be a huge benefit of being in family office as an investor is that we have a lot more patience with our entrepreneurs, because we don't need to do an exit within 10, 11 years from investment. But so in terms of VC, I mean, if you say, when Henrik looks for a company that wants to go really global, you are going to need a lot of capital to take that market sort of, and then a VC, I would say, is a good companion, but an angel investor is good when you're starting out and you need more than money sort of to support you.
Actually, the pitch deck question comes a lot from younger entrepreneurs who are asking, how would you see a pitch deck? Because I receive like 10, 20 pitch deck per week, and there is no perfect pitch deck in a sense, because it's mainly about what you're trying to sell, what you're trying to build, and where you're trying to go. Yeah, I think that's the main thing. But as of Funderbeam, having good traction is key for us. That's the thing I want to emphasize on.
Yeah.
Though, we can work with convertible notes as well, so we can work with earlier stage startups too.
Right.
And just to add to this, I think what the venture capital space has gotten like with a bit too much PR the last few years. Like the venture capital is a really niche type of financing. Like there's lots of good financing from Poland, from state funds, from banks that can be great for different types of companies. Like venture capital is a very niche type of capital that is not for every type of company. There are so many great companies that I meet that are amazing, that I would love to invest into personally. I can't, for many reasons. But that don't fit the venture capital model. So I think...
that's all we hear about as startups. We hear about VCs, and that seems to be the way to go, right? It's what record companies used to be to artists. It was the ultimate,
But I think it's also a fairly common misconception that you need outside money to make your business work. Like bootstrapping is bootstrapping basically means that you sort of decide to only run on what you yourself invest in the company, or that you don't take in outside investors in until you sort of have a strong enough case to and you really want to scale. So one word of advice, if you're thinking about if you're looking to bring in money, like really think about what you need the money for. Like, do you even need money? Because like Henrik said, a lot is just PR, and just consider what's best for you and your company, basically.
Yeah.
Whenever I say this, I obviously also have to say that if you want to do something huge, then we should definitely talk.
Yeah.